5, 4, 6, 3. Hello and welcome into another episode of Good Morning NASDAQ. You are live with me. I am Dom. That is Huddy. We are Clover Trading, and we are honored and proud and privileged to be here today with you. How are you doing today, Mr. Michael Hudson?
I'm good. I actually just found this little widget on Thinkorswim. It's called Trader TV, and you
Okay.
can play like CNBC US or Schwab Network. I guess those are the only options.
Okay.
It's kind of cool.
That
So I'm
just
doing good. I'm finding new things. I'm discovering today. I'm inquisitive. I feel good.
It's always nice when you find another little tool, something to add to your toolbox, something you can. I remember finding Dilution Checker for the first time, and I was like, I just cracked the code. I don't ever have to read
Yeah.
another filing. They're just going to tell me everything.
Which is interesting because that kind of changed the name of the game with dilution. I mean,
Oh, for everyone.
I feel like there was a bigger edge back when you were the only one that knew, okay, why are these penny stocks running? Okay, their agenda is to dilute their stock into this like fluffy sounding PR. And those who knew how to read filings were the ones that were able to take actionable trade plans versus like hidden resistance that you can't really see on the chart. So it was a huge edge for those people that took the time to read through the filings and find the conversion prices. But now you have something like Dilution Tracker that just straight up tells you in 5 seconds by looking at it. And so the edge is a bit evaporated there relative to what it used to be. I mean, obviously there's still edge, there's still hidden supply and you still have to go find it. But it used to be much more tradable.
Well, I mean, every single morning when we're doing what we're doing right now, we're going through the gappers, we're going through the recent runners, right? And instead of just going through and it being a 10-second process to see what number there are warrants at or if there's an active ATM, you legit had to go through multiple different filings, read through them, do the control F. I remember Michael Good had a DVD called How to Read SEC Filings. Like it was a very boring, meticulous process.
Yeah, you had
And
to make
now,
sure that
now it's
you had to make
literally
sure
5 seconds.
you had to make sure the 424 connected with the right S3 and the S3 had an effective statement. And then there was another filing to make sure that that wasn't part of that. Oh, that was other dilution. It was very, very like time consuming and like hard to kind of piece together. And now it's easy.
I think it's so cool how in this little niche of like day traders of small cap stocks, there's like so much businesses built around it, from like tracking websites to new brokers popping up all the time to fit our needs, to stuff like Dilution Tracker, where the need was like, I don't want to go through and read all the filings. Let me create a website, charge you for it. It will just tell you.
It's actually genius what they did.
Oh,
Like,
it is genius.
the cool thing about trading is it's such a new industry. I mean, like obviously people have been trading since the 1930s, but like the game has changed since it went
Not like
electronic.
this.
Well, since it went electronic, like in the 1990s, you were reading stock tickers off a newspaper, calling in your broker to make an order, and like you didn't have level 2 for damn sure. So now it's different, and as the industry progresses, you have these people innovating, whether it's Spike It with their data mining or it's Dilution Tracker with their filing mining. It's just amazing that people are finding industry within industry to help the community and put money in their own pockets as well while they do it. And it's cool to see that innovation happens even on the smaller scale of stuff.
Yeah.
Speaking of dilution, NKLA, fun one for Huddy, like financial entertainment type of stuff. They just came out with their dilution in the past 2 days. They have like something like 125 million shares priced at a 38-cent floor. So that's probably never coming back.
That's the thing about these stocks, though, right? We get to enjoy them, their presence, their friendliness, their frustrations for just a little while, right? They come into our life for a little while. They're like a bee or a sea otter. And
Sea
what?
otter for sure.
Yeah, and you see them. You see them out in the distance. You get to enjoy their presence. And then one day the weather changes or the season changes and they're gone and you never see them again. That's a lot like how these stocks are. We go through the life cycle that we always talk about. And once they've completed that from start to finish, they take their bow and they run away off into the sunset. And it usually ends something like this. It usually ends with bad news, some sort of dilution or diluting or liquidation of the stock price, or just everyone saying goodbye, we're on to the next, your old news.
Yeah, and the thing that's cool about the sea otters is, you know, NKLA swam into our life, pun intended, back in March and April 2020. Hang on, my dog's gonna go crazy. And we never really saw it again all the way until 3 years later, which is, kind of crazy. Come on.
Come on, Jim.
The mower guy. All right. So enough about sea otters this morning. Let's get into the gappers, shall we?
What were you? Wait, did you explain the sea otter thing?
Yeah, I was just saying that NKLA was a sea otter that swam into our life back 3 years ago. Like went away. Never even thought I'd trade the ticker again. Honestly,
oh yeah.
And then 3 years later, there's our sea otter Jim.
It was like they grew up right in front of our eyes. Well, right outside of our eyes.
And if you guys don't know, like having dilution priced in at 38 cents when your stock is $1.50, like it's going to be a nonstop selling situation for quite some time.
All right.
So yeah, but that's not really a gapper, so it's kind of off subject. But
I got a few. I think I got three. We're gonna go over today.
Three. Let's do it.
So a couple low priced ones, and a not so low. So let's start with the top one. We got a 62.85% runner day. Mr. AXLA, show up on the stage, please.
Axla.
I could not find news for this one. I'm guessing, again, it just fits into the low price theme. Got a tiny little smiggling of volume yesterday. After hours as well. Looks like someone knew something because it kind of like
the company recently posted a narrower than expected quarterly loss. So I would just kind of put that into that earnings column.
When did that come out?
That is what the computer is telling me at 8:31 a.m. 8/3, I guess, is when they posted the earnings.
So annoying, I can't find it.
So kind of a delayed reaction here.
60 million float biotechnology company.
Classic.
We got 4 months of cash left. An active ATM that looks to be pretty small. Okay. So kind of medium on the dilution front. News really isn't groundbreaking or earth-shattering, but you have to understand it's definitely fitting into that theme of the last week. Again, we've seen a couple of these since then that have fit into it, although nothing has really gone too crazy or bonkers. It's basically a 1.5 to 2 day run for those type of stocks. But it gets people excited.
Yeah, and this is kind of an interesting chart. I'm looking back and I'm seeing like, okay, it doesn't have really like a great history of running big. A lot of the big candles have topped out and failed. What's interesting is all three candles topped out at 80 cents. If you're looking back in December, January, and February, each spike that it had created quite a big resistance zone at 80 cents. That's always something to look at. Not really my type of ticker to be buying at that overhead resistance, but it's an interesting triple top, specifically at 80 on big volume.
Very interesting. And, we are over 100% away from there. So we shall see. In volume today in pre-market, already 15 mil. The biggest volume day during that stretch where it topped out at 80 was 30 mil. So you got to assume we're probably going to be flirting with those numbers, at least surpassing them. We shall see. You never know on low price stocks like this. I just want to check one of them real quick. Okay. All right. Moving on to our friend. I think the next one was, where did it go? GMVD, was that it? No, that was not it. SIDU was one of them. This is
SIDU. CDU. This is a space company.
Something I do remember moving a little bit earlier in the year. Beaten down from them. He was a friend of a sea otter, and now he's really gone off. He's way away from us. 40-cent support line, kind of from this most recent big gap down. We're sitting around 21 cents right now. Let me zoom in a little bit. Pretty big move so far. Again, does consistently okay volume, but already, what do we have here? 11 million today. So probably going to flirt with some bigger numbers. If it gets any eyes, interest, and attention out of the gate, it should be flirting with like the most volume so far this year. Let's take a look at SIDU. Pretty decent amount of dilution. 63 million float, 5.9 months of cash left. The news today is that they acquired edge artificial intelligence company Exospace.
Oh, EKSO.
No way.
Maybe. You said exospace. That's what it reminded me of.
I thought Exo was. I'm looking.
No, EKSO is definitely not
In
artificial
AI,
AI. But
yeah.
what's cool is, that's an AI press release. I think they're a little bit late to the theme. But that theme will come back one day. I'm almost certain of it. Like we're gonna get another sector move of the AI sector. So just knowing, stocks that have produced some kind of AI related, um, business motive. I take note of that in the back of my mind. I mean, off the bat, I don't like this charts of CDU, but these cheaper stocks coming off the bottom with overhead like 90% away is interesting.
Yeah, what
Maybe
kind
something
of
they
something I'm going to try to focus a little more on is when I see some news. Like yesterday, we talked about, was it TMBR?
yeah,
We were talking about like an acquisition or something, and Kellogg just kind of brought to the table in the Clover chat while we were going and talking about how it was like talks of an acquisition, not that it had officially taken place yet. So I really want to do a better job of kind of trying to read between the lines on press releases, and it ended up going sideways and not really doing much. There was a little fade to be taken advantage of after the morning spike, but didn't really end up doing much. So as we go through these news and stuff, I really do want to think about reading between lines a little and trying to understand the news a little better, since we're doing it every single day. But with CDU, I don't expect there to be a ton of shorts interested in the stock down here from a 15 to 22, 23 cent move. So I do feel like if it's going to get momentum, it's going to have to be primarily momentum buyers. Not sure if they exist this week. We shall see. But I would like to see another low price runner, since I was out on vacation last week and didn't necessarily get too active with that little mini run.
What run?
The little 2-day run.
The otter?
2 sea otters. FULC. Fulcrum Therapeutics. Biotech 57 mil float. News today is the FDA lifts clinical hold on Fulcrum Therapeutics for sickle cell disease. What is a clinical hold? Like they're not allowing them to pursue certain things?
Well, lifting a hold means that they are allowed to do certain things.
Yeah, that's what I'm saying. So like they were paused on what they were trying to do.
Yeah, so now they can advance their FTX 6058 through clinical development to address the significant unmet need in the sickle cell disease community, which is a real community, and I applaud you for trying to help them. Based on the initial data from phase 1B trials, so super early on in their trials, which showed increasing levels of HbF with each dose escalation. So they're super early in their process, and the FDA is allowing them to continue, is what this reader is interpreting.
All right, let's move to the daily chart. FULC, kind of a big multi-week month kind of breakout through this 450 area, pushing as high as 650, coming off those highs a little bit right now. Giant gap down earlier this year from the 12-13 area down to the 5-6 area. That's kind of where we spent the last little while. For this to kind of have
consolidation too, it would suck if you were, kind of in from February 17th swinging like you like this tight, consolidation. Looks like some kind of flag is being created, and then pew, gap down.
Biotechs, baby. They're always trying to meet those endpoints. Remember me and Schwartz just talked about they're always meeting endpoints. This company was trying to work on some endpoints for sickle cell. They got on hold. I'm guessing that could probably be what that gap down was from if I dove into it. When did you say that was? February?
Yeah.
They have a lot of news, this company.
And it's kind of interesting. I remember Roland used to talk about this a lot and with biotechs, and it's not something that I really do because I just don't to not do research in this manner into biotechs. It's just way beyond my skill set of knowledge. But oftentimes, if you get like this, not oftentimes, but if you get this like massive gap down because like they can't pursue meeting their endpoints because a hold got put on their trials, and the gap down from like 12 to 6. Well, if the hold is being lifted, then all things holding equal since that news, and I don't know anything about the company, but in theory, it should be worth what it was, as of the time of the gap down, instead of like when they couldn't pursue trials. And you'll see that a lot, like sometimes, and like a more like sturdy case for it would be like, okay, turns out like you had some trials and a patient died. Fast forward like five years or a year, and oh, by the way, the patient didn't die from the clinical trials. They had COVID. Let's just say it. And so it had nothing to do with the trial. Okay, the stock is gapping up and going back towards where it was because the news didn't turn out to be as real as it was. And so holding all things equal, like the stock should not have experienced a price change.
Tell you what, I'm just going through the news of the last like 5 months. A lot's been going on with Mr. Fulcrum Therapeutics. Their CEO resigned. They have a new CEO, a new CFO. There's a lawsuit against them.
And a price target raised to 11 from hold to buy. So someone likes it.
There's a lot going on here. Usually when I have that many conflicting, confusing parts, I stay away. I generally would stay away anyway. I don't see anything necessarily in this daily chart to get me all that excited. It is a bigger float, 57 mil. So just kind of watch that and see how it goes, but probably nothing there for me. Did you, speaking, you said the word COVID. Did you see that I saw something in the news about them blabbering about new variants and stuff?
Yeah, we have the onslaught of a new booster shot coming. We have the onslaught of TSA demanding masks again, and as early as October. That's all hearsay that I see out there right now.
Well, what do we think then, Huddy, about a potential little late fall COVID run?
You could only dream, but
I know it's too good to be true.
I don't think it'll go down the same way, but I am excited for end of fall. I do think we will see some sectors. I mean, it's a possibility, end of fall going into an election year is generally like a big year of volatility, historically speaking. So there could be something. I just don't think the vaccine stocks will ever. I mean, I'm sure you'll get some PRs and penny stocks about, rapid tests or whatever, if it actually does kind of go nuclear. And, but I don't think you'll get the full-on sector again. I don't think you're going to get Moderna to 500 again.
We don't need that, though. That was like Christmas every day. We just need, give me 2 weeks of something, and I'd be grateful.
I'm grateful for what the market's been providing right now. We got NVOS, also a gapper this morning, continuing the theme of these low-priced hot runners. Another one with big volume yesterday, closed at 17, right underneath support, now gapping up to 21. I've been having a good time with these cheaper stocks.
Yeah, I mean, I've seen all the interest there and the chart patterns. I haven't been able to trade them because, like I said, I was on vacation last week. Super frustrating. That's why I can almost guarantee you nothing's going to happen this week because I'm back at home. But it is nice to see this move. That's why, when I see these low price stocks, NVOS, TTOO, and then the new gapper stuff like SIDU, AXLA, whatever the other one was. I hope that they run. I hope that they get volume and the interest, because it's a great price sector to get a lot of interest for a couple weeks, because they start off low price. They're super affordable to trade. You can make giant percent gains on smaller dollar positions and still make a lot of money. The ones that go the furthest, you can see moves that go from 10 or 15 cents up towards $1 and eventually become amazing shorts, because at that point they're insanely overvalued. It's one of my favorite areas of the market to get hot and trade, because it's where we started, right? That's primarily what I did with OTCs, was cheap stocks, 5 cents, 10 cents, 50 cents. And And I had a lot of fun doing it. And one of my favorite parts about these types of stocks, these low price tickers, is that they move a whole heck of a lot like OTCs. And that, I think, is an edge in and of itself if you have studied and trained in the OTC world. But MVOS needs to chill TF out, because I
think
do
it will.
not want it to break out like this.
You do if you're long from 12.
Are you?
No.
Say that you would never even plan for that 100% bounce first screen day. Well,
Honestly, I did buy it at 12 yesterday, and I was looking at the chart, and I said to myself, 25 cents is a huge level. Like, I'd rather be long at
there's
12 than 25.
some moon market news, or posted some NVOS news about NVOS granted registration number and regulatory approval by Turkey's Ministry of Health
Well,
just now.
great.
So let's see if it goes.
Yeah, and in my mind, if you're buying the first screen day, I have no problem selling the first screen day and then either taking it for a gapper setup and or just looking to rebuy it day of the breakout, especially knowing in the back of your mind that you have cushion on the ticker. Like if you had made money on one part of the move, it's not about like buying the first screen day, taking it to the multi-day breakout, and then taking it to the first red day. Like I think that is most of the time not going to pan out. You're not going to get to all three stages. So it's kind of like a losing idea. But if you take the meat of the move in each part and reload and rebuy for the next phase of the pattern, I think that is where I think I do better in those circumstances than trying to hold through the whole move.
Yeah, I mean, I don't see any need to be playing the breakout from yesterday. I like the first green day idea that you traded on it, but from there on out, I don't see the second idea.
The gapper.
And that's just not something that's worked for a couple of years. It's almost
more like
always
a Kellogg
been
pattern.
Yeah, it's almost always been first green day, basically for the first 2 hours of the day, and then new lows by the end of the day. But it's pushing, so we shall see. We shall see. Any questions? Someone asked, "What is dilution?"
Dilution is like hidden supply on your chart. So it's when the company, gives shares, common stock to an individual or a bank or whatever, like an entity of sorts. And usually those shares are offered at a premium. So, like the NKLA situation, like the whoever the entity is that got the shares, their shares are priced at 38 cents. Right, so they just got a bunch of shares at 38 cents. The stock is at $1.50. Do the math; they're up a couple 100% on those shares, so they have incentive to sell. And that's basically what dilution is. It's like you're splitting the pie of the shares outstanding. You're making another section of the pie, so you're diluting. How much pie you get if you had if you had a whole pie, and then the company decided to give half your pie to someone else, you just got diluted. And then that someone else, in the terms of like penny stocks, oftentimes they get favorable prices because the penny stocks are crap. So they negotiate a favorable premium to market prices, so something cheaper. And then they end up with a bunch of shares or warrants that can be converted into shares at cheaper prices than what retail owns in the past like couple days. So that, provides for some kind of hidden supply that's not necessarily marked on the chart, but there are shares being dumped onto you, not just from bag holders, but also from these people that have shares at a cheaper price. That's dilution.
Okay. All right. Last question, and we'll wrap her up here, Huddy. How did you know to take NVOS first screen day when eBet and TIVC both failed first screen days? That kept me away from the trade on NVOS. I know the answer, but you traded it, so.
So eBet, I was just kind of looking at them all yesterday, and NVOS is the only one that really qualified for a first screen day setup, and I'll explain what that means. I mean, just on Friday, if we take eBet, this was like my process of elimination. I look at Friday from eBet, and I see that yes, it's a red candle because it closed below the open, but it did gap up 20% that day. So technically, it already had its first green day bounce, being up 20% and then sold off, but still closed green. So green being above the previous day's close. So this one technically can't be a first green day since it already had it. It's more of like a, if there is a level, it's an 8 cent like multi-day level, but it's not really like a first green day to me because 8/18 was a first green day. So there can't be a second first green day. So that one I kind of wrote off, and I'll still watch it for the 8 cent area. I think it's interesting, but I'm not going to try to play it like a first green day. I looked at TIVC. Basically, the volume completely turned me off. I mean, this thing is, you know, like dwindling fast in terms of like the volume. And even yesterday, if you had just watched it for like a couple minutes, you would see like really wide spreads and not a lot of whole like order flow or anything on the time and sales. So this one was kind of an immediate ignore just from a sheer volume perspective. And then NVOS was also light on the volume to start. Like I will admittedly say that. The difference with NVOS is I think it was a little bit more of a runner, has a little bit more of a history, has a little bit more trader attention because of how many times it's spiked and gapped. So it's more of like a real runner, whereas TIVC, like that might be an otter that swims away and you never see again. Whereas NVOS, it feels like it's here to stay. I mean, we were trading it back in March and May, and I don't think I actually made trades on it, but like that's what I mean. Like traders are going to flock to this one because they're familiar with it. So that's number one. I really like that aspect about NVOS. Number two, really nice run from 6 cents, like the low where it started from, all the way to 25, which in my mind is like a 300% run. So definitely volatile and has tons of range, which is not what TIVC had. And technically speaking, off the highs, off of a 2-day run, we never really had a red green move. We definitely never closed green. We had a spike into green on 8/17, which could have created more bag holders, but really that just like became more of like a price target for me to sell my first green day long into that area more than like, oh my God, it spiked on huge volume and failed, like it did at 25. So never really had a first green day on its run up. So, as it's kind of going through red to green, I was interested in buying it, especially after seeing TTOO's success. I figured one of the sympathies were to follow suit, and I'm willing to take that gamble on the one that fits the criteria the best for me, and that was just NVOS, like no doubt.
Yeah, and I get what the question basically is. The question is basically asking, they were all part of the same theme or whatever, so why did you trade one of them if some were failing? Um, and the answer is that is because it was kind of a poor sector momentum run. Like it wasn't like there was 10 to 15 stocks running and they were moving in spurts of 3 to 5 tickers and they were going, MVS actually did have a really nice percent move. Would you say 300% over the course of the whole time? But it really didn't have like that entire like sector momentum like aspect to it that takes a lot of time, where you get like a bunch of 300% runners at higher prices, where you have a ton of shorts getting screwed over, which makes the first green days a lot better, I think. So they all kind of go through the patterns together, where they spike together, first red day together, first green day together. I don't think you really saw that with this one because TTOO kind of was by itself, and then you had TIVC, was it EBET or MVOS first? MVOS, that kind of just followed a little bit.
Which is kind of better when it goes down like that. I don't like trading when they're all doing the same thing on the same day, and you kind of have to like follow the leader in order to know which like head of the snake is going to get cut off next.
Yeah.
I'd rather them be kind of stagnant like this has been, where it's like if you bought the TTOO first green day or breakout day, it wasn't until the next day, I think, or it was like if you bought TTOOs, Monday was like the day to get the early entry on the breakout last week. And it wasn't until TTOO was at 60 cents, the breakout level being 45, so one day later, that EBET started running and NVOS started running. Like it was a day away. And then after that day, it was TIVC. So you actually had like a lot of time to prepare for something that looked similar. And it's the same way with these first green days. Like TTOO kind of showed the move first, and then NVOS was, delayed a day later.
Yeah, but so far, really nice continuation here on a first green day turn trying to break out attempt. So you'll see what this one does this morning, and hopefully it brings some sort of momentum back into this area, but I doubt it. But thank you guys for being here. Before you head on out, if you could grab that, hit that like button for the YouTube algorithm management. Is usually on me to hammer it home and just harass you guys until you hit the like button. But I don't like doing that every day. So I'm just going to ask you very kindly and nicely that on your way out this morning, you just tap it. Just a little touch of the like button. That should be plenty for it to go off. And then we will see you guys tomorrow morning for pre-market prep, free Wednesday, where we will go over our watch list. We'll have Jack Kellogg and Kyle Williams with us as well. And then we'll just continue moving forward towards the boot camp weekend. So we're really, really excited and I hope to see you guys there. But if not, we'll see you tomorrow morning. And we'll see you in the Clover chat if you're in there. We got webinars today, webinars tomorrow. If you want access to those, hit the link in the description for a 7-day trial. Get involved, get in the community, add a discounted price, and then make a decision if you want to stay. So I'm Dom, that's Huddy. We're Good Morning NASDAQ, and we'll see you tomorrow.